Welcome to Markets Now. I'm Michelle Rook with Vince Boddicker, Farmers Trading Company, and lots of red on the board in both grain and livestock futures trade today here, Vince. Let's talk about the grains first of all. Corn market, we had a very strong crop rating on corn. The first one out at 75% get to excellent. You know, is that part of it, this mentality that, hey, this crop is getting off to a pretty good start?
Well, you got to believe that's a lot of it. We had the run up, and it seemed like once we got to that Memorial Day Friday, that was about it, and they couldn't do a lot more than that. And since that point, it was end of the month selling, and add one to another, and I think you just got a bad attitude, and you have to have something to change that psychology to get the trade to want to buy. Right now, it looks like we're okay. Let's buy hand to mouth if you're a end user out there. So the market really doesn't have any incentive to get people to buy.
Yeah, and the corn market had been getting help from wheat, which was lower, so I'm sure that doesn't help. But corn market is getting oversold. I think we've been down like the last 6 sessions. Do we have enough, I guess, interest from a technical standpoint, or have we done enough technical damage that it's unlikely we'll see a rebound?
I think you could see a rebound anytime just from a psychologically and oversold. I don't think it's big. Could it be 10 to 20 cents? Yes. But much more than 20, I think you need some other reasons that we have right now. And so many times when a market turns, something changes out there, whether it's just a lack of selling or what it is. That's usually the first part, and then something fundamental comes along. Right now, fundamentally, besides weather, which is going to take a little while for that's a problem, it's got to be some other outside market that affects it to get people excited again.
Yeah. Do you think we've done technical damage in the corn market?
I think as you and I visited earlier, Michelle, it depends on who you visit with and what they're using. What we look at in change of trend, we still got another 5 or 6 cents to go lower before we would change that trend. If we do much more than that, then you could free fall in there. But otherwise, if you're an end user that you need some feed bought in here, this may be a place to look at doing part of that. I don't think you load everything up, but it's a place to start looking at something if you need to secure it.
What about soybeans? Is this supply or demand that continues to weigh on the market, or is it both?
I think it's got to be both in there. Beans, unlike corn, you don't have a huge supply, but the rest of the world is good that way. South American crop in Argentina was good. Brazil was short, and we'll find out how short. But even on that crop, you're still 20 to 30 million metric tons bigger than last year. And we're looking at better or more acres this year and good crop conditions coming in to start the year. So why, if you're someone out there across the sea that wants to secure something, again, why do you want to do it? And let's not forget about, I think we are the slowest pace of new crop bean export sales in the last 19 or 20 years.
Yeah, and old crop has not been that great either. Soybean meal and soybean oil have also kind of drugged down this market too, don't you think?
Yes, they have, especially the meal. And the oil, I think, has got some of its weakness from the energy markets and when they've been there. But yes, so much, I think, is the meal market. That's what led us up. And when it turned tail and started to go south, you're just looking for somebody to step in and buy it to find support. But I don't think you're there yet.
So same question on soybeans. Do you think we've done technical damage? I mean, we're below key moving averages. We're below the $12 mark now again.
I think, again, in some people's view, the answer is yes, and not that I like it down here, but again, another 7-8 cents lower from where we're at. If we can hold July above 11.70, I think you're okay. November, you could probably go another 15 cents before I think you're going to change trends on some of the numbers that we look at. But it's sure not friendly, to say the least.
Wheat futures saw some double-digit losses on Tuesday. So is the global weather story with Russia over there, or is this harvest pressure, or what?
I think the global weather thing in Russia is over. We may have some problems in Europe. I know there was flooding in northern and central parts of Russia where they got the spring wheat. They weren't getting it planted. So that's part of it. So you got old news there that nobody cares a lot about. But the other side of it is harvest pressure. Yes, both Oklahoma and Texas are ahead of schedule on harvest right now it looks like yields are coming in better than expected and above trend line. One of the analysts we looked at today in respect really thought that next week's WASDE report may see some U.S. carryout around 800 million bushels or better.
Yeah, we did have about a $2 rally off of the lows as well there. So you kind of got to believe that from a technical standpoint, we probably haven't done much damage yet, have we?
No, we haven't, but I think right now when you put that high in last week at 760 in that KC July, I'm just not sure you can muster a lot more than that for the now, especially when it sold off the way it did right after that.
Cattle market, we did hold and bounce off of our lows yesterday in the market. Did we hold those support areas today on this down day?
We did. Feeders are still a buck and a half off of those lows. I would not be surprised if we still see new lows over Monday. Tuesday again may be disappointing after starting a $1.20 to a $1.30 higher in the feeders, and you go home on the negative point. But it just don't get a lot of things. You got, sounds crazy again, but you got a new moon coming in here, and a lot of times you're going to see guys buy feeders on that one. But we still think I got some lows due late next week on the feeder cattle and fat cattle market, and I still think we maybe put some more new lows in short term.
Even though we have such a big discount to where the cash is?
Well, on the fat side, you do. On the feeders, you don't, but on the fat, you do. Now, the question is when you look at the June, let's make the assumption that is the beef market about ready to turn lower in those cutouts. If they do, could you see cash come down and meet the futures versus futures going up? Yeah, that's the thing you don't know. And typically this time of year, and again, higher prices, we probably change it a bit, but it's always been a pretty good adage that that first half of June, cash is 50 cents premium to the board. The second half, it's a 50-cent discount. So right now you're more of a $4 premium, and something will give, but it may have a few days or a week before it has to do that.
And the hog charts, Vince, very beat up here. New lows for the move again on Tuesday. Are the funds about done liquidating there, do you think?
Sometimes you wonder. I really thought they were last week, but yesterday when they came down and closed near the lows, that wasn't a good sign. And this morning, it seemed like when that July took out that February 13th low, there was probably stops underneath that. People weren't willing to stick around anymore, and it just ratcheted lower. Now we got to see, where do you find support? Are we oversold? Yes, we are. But in this kind of a market, it's irrelevant. As we discussed earlier, last Friday's Commitment of Traders report showed the funds along 29,000 contracts of hogs, where 5 weeks ago or 6 weeks ago was 92,000. So they've liquidated a lot, but can we see them on the minus side if they don't like things? Yes, we can.
No doubt. All right. Thanks, Vince Boddicker with Farmers Trading Company. And that is Markets Now.